Hi, this is Steve O'Hare from Signal Centre. It's Monday, the 18th of November, and I'm presenting a medium-term outlook in commodities for Signal Centre. So I'll start off with the gold, and I'll drill down from the weekly time frame to the 4-hour time frame, maybe even hop into the hourly if there's any real relevance there, and we can give an overall view of, the technical formations, indicators that we're really looking at. Let's jump onto the weekly chart if we can. Here we go. Now, on the weekly picture, we've had this impulsive rally higher, and we've topped out around about 1556, and we've seen a nice corrective channel coming down from the highs, and I think there's a little bit more in this sell-off. If we look back at the major levels previously, we had this double top formation way back in early January, which saw the move lower. And once we've broken this resistance, that came in at $1,365. We've extended higher quite aggressively and quite quickly, and now we're getting the obvious correction from that overextended rally. Now, the real levels I'm looking at for gold at the moment, I still think we have a really nice reverse head and shoulders formation that has more potential in it. Let me just draw it in here quickly to give you a view of it. We thought the initial right shoulder was around about December 16. It became a complex reversal, so the shoulder came there, so a little bit later. So we broke it up really nicely higher, and now we're in the middle of a throwback. Now, throwbacks are very common in reverse head and shoulders formations, especially complex ones. And so the real overall view is for prices to move higher, to continue this rally. However, we do see a further correction before this move happens. So short term, we're negative on it. Longer term, we're positive on gold. I'll show you the daily chart. Again, a head and shoulders formation. We've got a downward trending resistance line coming in as well. That's coming in around about $1,506. We had this throwback, which overextended throwback, and that capped out just under $1,520, and we've seen the move down to the 38.2% fib retracement level from the, let me just redraw this, that's more like it, from the move from 1266 all the way up to 1556. So this is quite key, this 38.2, that's a normal correction. We could get more of an extended one. As I say, that lines up with the throwback on the longer term chart, but this is the real area of activity that we saw between June and July 2019, and we expect real support to come in around there. So the 50% fib retracement is 1411, 61.8 comes in at 1377, and obviously that will line up very nicely with the 1365 support. So that's the area we're looking to move down to. 4-hour chart, we're in a little bit of a reaction higher from here. We've topped out and extended lower this morning, has had a decent correction lower. Again, I think we're going to look to test. We've had the crossover in the MACD, and normally when you see a crossover, you can get these more aggressive moves lower. So 1445 is the real level to watch. A break of there, and the move should be fast. Let's take a look at silver. Silver should be around about the same. We've got they're both based against the dollar price action, both safe haven products. Silver, obviously, another precious metal which is used in the manufacturing, and obviously we've got a bit of a slowdown going on there. However, we've got this long-term trend line on the weekly, which we broke through, and we're having a bit of a throwback there. I'm still a little bit nervous about whether this will hold or not. The momentum seems to be aggressive this over the last few weeks. Silver seems to have been impacted slightly more than gold from a negative perspective over the last few months. The real support comes in at 1393. I'm not expecting it to get that far, but I do, in line with the gold, expect a retracement. Now on the daily chart, it's a little bit more interesting from a breaking of trend line and formation perspective. We had this really decent support coming in, and once it broke at 1750, we've seen price action move aggressively lower. We're forming a bearish flag. Now the measured move formation for this flag is a move down to $15.22. Also, before we get there, we'll have decent support around 1632, and the horizontal previous swing low comes in at 1590. So a break of this flag formation, which is around about the 1670 area, would need to be maybe confirmed by a break of 1663, and then plenty of room for a further correction lower in silver. The 4-hour chart makes it a little bit clearer where we've had the previous swing lows. We've seen nice reactive buying off this level, but again the sellers continue to be attracted by the rallies, and further downside looks ominous. And MACD, we've got a break, obviously, sorry, a crossover, and we're turning negative on the MACD, so be aware of that. Finally, we look at oil. Oil, a bit of a mixed bag, really. We've got the weekly chart trading within a symmetrical triangle formation. We're pretty much mid-range, so very tricky to give a more medium-term outlook on this. Price action contained, or we'll have levels around about $70 and around about $46 to $47 of support. And a break of either of these trend lines should give us an indication of the next move. The daily chart, again, we've seen the rallies continue to attract sellers. We've got a nice bullish channel formation forming at the moment. Will look a bit better on this shorter term chart, the 4-hour chart. So at the moment, we're seeing this level at around 57.84, and that seems to attract sellers. Any moves above here seem to be short-lived. Good resistance here, and again, we're looking for maybe some negative price action over the week, over the coming weeks, to retest this upward trending support line. So that's it from me. Pop in next week and we'll review the charts in a bit more detail. Thanks for joining us.